Hello everyone and welcome back to Investment Research. I'm Simo, your equity research analyst, and today we're going to take a serious look at BioMarin Pharmaceutical Inc., ticker BMRN. We're not just scratching the surface, we are digging into the financials, trading dynamics, valuation, and what it really means if you're considering buying this stock. I want you to walk away with a real sense of where things stand, what could go right, what could go wrong, and whether this could be a worthwhile position. Let's start with the business and financial snapshot because that matters. In the second quarter of 2025, BioMarin reported total revenues of about $825 million, up roughly 16% from the same quarter a year ago. That number was better than many expected. What's more interesting is how profitability is shaping. GAAP net income for the quarter came in at around $241 million, representing about a 125% increase year over year. On a non-GAAP basis, the earnings per share in Q2 were about $1.44 up, roughly 50% from a year earlier. What you're seeing is strong operational leverage at work growth plus margin improvement. If you dig a little deeper into segments, you'll note that product revenue for Voxzogo, the therapy for achondroplasia, grew about 20% year over year in the quarter, and enzyme therapy revenues grew about 15%. Those are meaningful contributions because they are recurring, largely non-cyclical products targeting rare diseases. That gives BioMarin a stronger base than many biotech companies still awaiting commercialization. The company ended Q2 with about $1.9 billion in cash and investments and generated approximately $185 million in operating cash flow in the quarter. That kind of cash generation gives the company flexibility to invest in pipeline acquisitions or strategic growth. Moving now to valuation and trading considerations. The stock has lagged despite these strong numbers, which might be telling you something. Either the market still has doubts about future growth or there is a risk premium being priced in. For example, the company raised full year 2025 revenue guidance, non-GAAP operating margin guidance, and non-GAAP EPS guidance. It expects full year revenues now in the range of roughly $3.125 billion to $3.2 billion and non-GAAP EPS closer to about 4.40 to 4.55. With that in mind, if you take the current share price and compare it to those earnings expectations, you can start to assess whether the stock is priced fairly or not. From a trading perspective, if you like growth and you're comfortable with some biotech risk, this might be a stock worth holding. But let's be realistic, biotech is volatile. Pipeline delays, regulatory issues, reimbursement, pressure, competition, all of these could derail expectations. And when a company has already shown strong numbers, the risk reward becomes more about execution and less about speculation. So if I were to frame a scenario, if BioMarin executes exactly as it's guiding or slightly ahead, maintains mid-teens growth for its core products, expands margin modestly, and the pipeline begins showing promise, you could see the stock move into a new range, perhaps into the $65 to $75 zone within 12 to 18 months. On the other hand, if the company slips guidance, disappoints, or macro industry headwinds hit, the risk could pull the stock back toward the 50s. That's the type of spread you're looking at. Let's also touch on trading setup and what I'd watch if I were positioning now. First, I'd look for next major catalyst, upcoming pipeline readouts, regulatory filings, or commercial rollout updates. A positive surprise there could trigger sharp upside. Second, I'd monitor margin trends and cash flow levels sustainable improvement. There will reassure investors beyond just one strong quarter. Third, I'd watch market sentiment and analyst revisions. Sometimes the stock moves not because of the business alone, but because expectations reset. How I personally would approach buying if I were you and I like this name, I might consider a modest initial entry now and layering in more if the company hits a positive catalyst. I would not allocate a large portion of my portfolio to this stock unless I was very comfortable with biotech risk. I'd treat it as a growth plus optionality, play growth from core businesses plus optional upside from pipeline. If you're more conservative, you might wait for confirmation of execution or for the stock to pull back to a better entry point. To wrap up, BioMarine has strong commercial momentum, improving profitability and meaningful cash generation. The business looks solid. The valuation is not cheap, but may offer value if execution holds. The trade is about execution now more than speculation. If you buy size it appropriately, stay disciplined and monitor the key items I mentioned. I'm Simo from Investment Research. Thanks for tuning in to this deep look at BioMarine. If you found this analysis helpful, be sure to subscribe and stay tuned because I'll bring you follow-ups, review pipeline updates, and track the market reaction. Until next time, stay informed and strategic. Let's expand on some of these points to make the script longer and provide even more depth, still maintaining the no dashes rule. Expanding on the business and financial snapshot. Beyond the impressive revenue and net income figures, it's critical to understand the underlying drivers of this performance. BioMarine's strategy has consistently focused on pioneering therapies for rare genetic diseases where unmet medical needs are significant. This focus allows them to often command premium pricing and face less direct competition than companies in broader therapeutic areas. Voxzogo for achondroplasia is a prime example of this success. Its continued double-digit growth isn't just about market penetration, it's about transforming the lives of patients with a condition that previously had limited treatment options. This patient-centric approach often translates into strong loyalty and sustained revenue streams, a valuable characteristic for any pharmaceutical company. Furthermore, the growth in their enzyme therapy revenues underscores the stability and importance of their established product portfolio. These aren't one-hit wonders. Products like Naglazy for MPS 6 and Vimizim for MPS IVA provide a bedrock of consistent revenue. This diversified yet specialized product base shields BioMarine somewhat from the typical boom and bust cycles often seen in early-stage biotech. Their financial health reflected in that $1.9 billion in cash and investments and $185 million in quarterly operating cash flow is not merely a number, it's a strategic asset. It provides the war chest necessary to fund ambitious research and development initiatives, pursue strategic partnerships, or even acquire smaller companies with promising pipelines. This financial strength acts as a significant de-risking factor, especially in a capital-intensive industry like biotech. Deepening the valuation and trading considerations. The market's lukewarm reaction to BioMarine's solid performance and raised guidance is a puzzle worth solving. It suggests that investors are either still factoring in prior disappointments or demanding an even higher growth trajectory for future years. When analysts discuss valuation, they often look at multiples like price to earnings P/E or enterprise value to sales EV/sales. While BioMarine may not appear cheap on a historical PE basis, given its growth profile and leadership in niche markets, it warrants a closer look at its forward multiples against its peer group. The The fact that the company has repeatedly raised guidance for 2025 revenues and non-GAAP EPS to the $4.40 to $4.55 range provides a clearer benchmark. If you consider the current share price against these forward earnings estimates, you might find that the stock is trading at a more reasonable valuation than a superficial glance at trailing earnings would suggest. However, the risk premium remains a significant factor. Biotech stocks are inherently volatile. This isn't just about pipeline delays, which are common. It's also about the complex web of regulatory approvals, reimbursement negotiations, which can vary significantly by country, and the ever-present threat of new competitors or generic versions of older drugs. Even a minor hiccup in any of these areas can trigger a disproportionate sell-off. So while the company's strong numbers are encouraging, the market's caution reflects these systemic risks that are difficult to quantify. Investors are essentially asking what can go wrong next and pricing that uncertainty into the stock, elaborating on the scenario and trading setup. The $65 to $75 price target within 12 to 18 months assumes near perfect execution and a benign market environment. For this to materialize, BioMarine would need to not only meet but potentially exceed its mid-teens growth targets for key products like Voxzogo. Expanding operating margins modestly implies disciplined cost management and perhaps even greater economies of scale as their commercial footprint grows. Crucially, the pipeline needs to deliver. A successful Phase 3 readout for a new indication or a positive regulatory submission could be a game changer, driving significant re-rating of the stock. The market assigns value to future potential, and a clearer path for new products would unlock that value. Conversely, the downside scenario towards the 50s is equally plausible. A slip in guidance, even a small one, could be interpreted negatively by a market already skeptical of biotech valuations. Macroeconomic headwinds like a broader market downturn or increased interest rates, which can disproportionately impact growth stocks, could also pull BioMarine lower regardless of its individual performance. Industry-specific challenges such as tougher pricing pressure from insurers or unexpected competition in their rare disease segments are also potent risks. Understanding this symmetrical risk-reward profile is fundamental to making an informed investment decision. In terms of trading setup beyond the catalysts I mentioned, I would pay close attention to the company's investor relations communications. Are they consistently transparent about pipeline progress? Do they address market concerns proactively? Effective communication can help manage expectations and reduce volatility. Additionally, track insider buying and selling. While not always definitive, significant insider activity can offer clues about management's confidence in the company's future prospects. For those using technical analysis, monitoring key support and resistance levels can also provide entry and exit points. A decisive break above a long-standing resistance level, for example, could signal renewed bullish sentiment. Refining the personal approach and conclusion. My personal approach to buying this stock would emphasize prudence and diversification. A modest initial entry allows you to establish a position without taking on excessive risk. Layering in more after a positive catalyst like a successful clinical trial readout or a new regulatory approval provides confirmation that the company is executing its strategy. This approach reduces speculative risk and aligns your investment with tangible progress. Treating it as a growth plus optionality play is key. The growth from the existing commercial portfolio provides a degree of safety, while the optional upside from the pipeline offers the potential for significant returns. For more conservative investors, patience is a virtue, waiting for a confirmed track record of execution post-guidance or for the stock to pull back to a more attractive valuation offers a higher margin of safety. This might mean missing some initial upside, but it significantly mitigates downside risk. Ultimately, your investment decision should align with your personal risk tolerance and financial goals. To reiterate, BioMarine demonstrates strong commercial momentum, improving profitability, and robust cash generation. The underlying business appears solid and well managed. While the valuation isn't what some would call cheap, it could offer considerable value if the company continues its current trajectory of strong execution. The investment thesis now pivots on diligent execution rather than pure speculation on future potential. If you decide to buy, ensure your position size is appropriate for your portfolio, stay disciplined in your monitoring, and keep a close eye on the key drivers and risks we've discussed. I'm Simo from Investment Research. Thanks for tuning in to this deep look at BioMarine. If you found this analysis helpful, be sure to subscribe and stay tuned because I'll bring you follow-ups, review pipeline updates, and track the market reaction. Until next time, stay informed and strategic.